Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We are fortunate. We get lucky. We got a great set of conversations today, but we don't know the news flow. Here's the news flow. The Bank of England, they leave rates. They say interest rates, quote, likely to be reduced further. They do not talk about Liverpool's defensive strategy. Bank of England sees inflation at 1.8% Q1 2028. None of that matters. What matters is, and this is particularly for the United States crew listening this morning, it was a 5-4 vote. Joining us, Senior Vice President Dissent at Mizuho, Jordan Rochester joins us this morning. Jordan, let's rip up the script, and you can do this because you're encyclopedic. Do Americans have to get used to a Bank of England dissent with the upset over our new chairman?
No, I don't think they're going to be upset at all. The Bank of England is doing what Donald Trump would like his own central bank to do, which is they're slowly cutting interest rates. And the annoying part about the Bank of England is how slow it's kind of been in the past few months. There's a little bit of a political problem. The budgets that we've had from Rachel Reeves, the Chancellor, had raised inflation in 2024 when she gave that budget. So last year we had sticky inflation, a good 0.5% of the inflation the UK had came from her tax-raising measures. It's now flipped the other way. The Chancellor learned her lesson, and in the budget, she's cut taxes in certain areas. So the Bank of England's looking at a more dovish outlook. Inflation's going to hit their target pretty much by the spring into the summer. And in our view, we're going to get more rate cuts from them. Today, we didn't get it.
From where you sit, would we be better in the United States with a more fractious central bank, Federal Open Market Committee, where we see Bailey and Catherine Mann of Citigroup and Brandeis, where we see certain presidents and governors at the Fed dissent more and more visibly?
I see what you mean. It's going to happen, I think, under the new administration with Kevin Warsh coming in, if he gets confirmed, of course. The Bank of England we're very used to it. All the individual members of MPC are encouraged to have their own different views. And in the sort of minutes we got today, all their different views as to where rates should go and how quickly are all there from each member. That's something they took on from Ben Bernanke's review just last year. They implemented those changes to be more transparent. Where at the Fed, you're right, it's been much less of a dissent. Dissents are kind of a sort of red sort of headline on Bloomberg terminals when we get them. But we've already started to get them with Stephen Myron and others and Waller. So I think under Warsh, the hard part for him will be he might want to cut rates, but maybe the regional governors don't.
So, Jordan, when you talk to clients, what do they feel like the trade is in the fixed income space in 2026? We've got the Bank of England likely to continue to cut rates here. The Fed presumably will continue to cut rates here. What's the trade in 26?
I think the trade here is to kind of take the opposite sort of stance as to what we got in some spaces of last year. So in US rates, it was all about how far they could go in terms of the neutral rate being 3%, the long-term dot. So therefore, we should receive, which is going long US rates on the back of that. That's now turning. The labor market data in the US should pick up. We've already got the growth data storming higher in the data surprises for the US. Look at the ISM manufacturing this past week. So I think the trade is actually to bet on a US rebound in growth and therefore in the labor markets as well. And we're talking about higher interest rates in the US to come.
So it's interesting here. We're starting to see that a little bit in the U.S. yield curve, Jordan, the 2s and 10s. You know, you got 60, 70 basis points of steepening. What is that telling you there?
Well, the steepness comes partially from the front end being quite anchored to the dots. There's still just shy of 2 cuts priced in for this year. The long end's been driven by what's going on with the one big beautiful bill, the fiscal stimulus that we're getting, and also not just from America, but from Japan, from Germany and other parts of the world. Everyone's increasing the amount they're issuing this year. It's just very difficult for long end yields not to go higher. When you've got the issuance coming out the way it is and the growth picking up at the same time, I'm not sure why interest rates should fall. Then you've got on top of that Kevin Warsh's view on the balance sheet, which is all about reducing the size of it, which is active sales of US Treasuries if he was to do so. That would put further pressure on yields as well.
So, Jordan, how about in the European Union here? There was a bout earlier last year where, boy, Germany was talking about really stepping up spending on defense and other parts of its economy, maybe a little follow on from some other parts of Europe. Is that still the feel there, or what's the thought about Europe right here?
It's still the feel. The problem is it in the price? Is it a stale narrative? Could things turn against us? Well, we've started to get a similar story in European data surprises. We had a very strong German factory orders this morning, for example, 13% up year to date. What we've been waiting for. We've been waiting to see if this huge defense order through companies like Rheinmetall for further tanks, drones, planes, etc., would it feed through to the data? And what about the infrastructure spending as well, which is 500 billion euros over 12 years? Yes, it is. I think is the answer from the data so far. If that carries on, the market could revise up its ECB assumptions, and we're talking about rate hikes being possible, not this year, but next year.
Wow. Bloomberg surveillance host. We continue with Jordan Rochester of Mizuho, a wonderful team working with Dominic Constant and Stephen Rasciuto, among others. We welcome all of you across the nation. Good morning on the Pacific Rim. Good evening, I should say. On Spotify, it's a podcast. Thank you so much for your attention out on the Pacific Rim, and of course on YouTube podcasts as well. Jordan, I look at where we are, and once again I sit down. I got BitDog with a 69 handle, which gets my attention, but far more Jordan Rochester. I got a dollar that just won't strengthen. I mean, I got a 97.8 DXY. I got yen backed up to 157, weaker yen and all. I just don't see the catalyst to get into a new leg of dollar weakness.
Yeah, I think the FX space is one of the most difficult sectors to have a strong conviction on. You've got analysts out there talking about a weaker dollar on the debasement trade. I subscribe to that, which is I do see the sort of real assets outperforming due to the fiscal and monetary policy we're talking about. But that's real assets when we're talking about gold and silver and is Bitcoin real? Who knows? But when it comes to the FX space, which is euro versus the dollar versus the yen, the correlations that we're used to, the frameworks that we use to try and understand how do we make money from this, they're broken. Liberation Day completely changed it. Donald Trump told basically all the European investors, through other words, of course, to hedge their exposures more. And so we're having much more dollar selling in foreign exchange forwards, swaps, options, however you want to do it. But what I think is going to happen is the dollar is going to rebound in February. And we're getting that. Dollar yen's heading higher into this election this weekend. We're having euro dollar fall, cables falling against the pound. Right. Why? It's because what I talked about, US data surprises rebounding thanks to the fiscal and monetary policy kicking in. Bigger picture, I do think the dollar weakens, Tom. Why? Global growth. Where's the recession coming from? I don't see it. And when you have a global rebound, as I think we're going to have, typically that's an environment where the dollar underperforms and risk assets do well. So in the second half of this year, we could be looking at euro dollar 122 quite easily.
I mean, your meetings are intense. He goes into a room with like 12 people. Yeah. And nobody's taking notes. They're just listening. They got their digital iPads out, taking Rochester notes. What's the number one question you get right now, Jordan Rochester?
Will the Bank of Japan hike in April or not? I think is one of the most common questions. And it's one of those ones where it's really up to dollar yen as to whether they will hike or not. If we look at the pricing, it's 20 basis points price. So it's 80% probability it's going to happen according to the market. We thought for a long time July was going to be the base case, but it does seem that expectations are shifting forward. And do you want to learn? I learned a new Japanese phrase whilst I was in Tokyo last week, if you want to hear it.
Go.
More kimasho. And means let's make money.
Let's make money. There we go. I mean, you got to get out of the office and go see clients around the world. That's what you pick up here. Jordan, how closely are European investors following the upcoming confirmation hearings of Mr. Warsh and what it may mean for U.S. fiscal policy here? How critical is that to kind of 2026 views for a lot of your clients?
I think for a lot of them, they think it's done. Whether Murkowski or Tillis holds it up in the banking Senate committee is kind of for the Wall Street Post to talk about, Wall Street Journal. But I don't think that it's going to really matter to markets too much because most people just think eventually the case will probably be dropped in some way and it will just go through. I think if Powell hangs on or not is more of a crucial question. for markets rather than will Warsh.
Frame that out. Thank you so much. Thank you. Frame that out, Jordan Rochester. What happens if he leaves? What happens if he stays?
Well, if he stays, he's probably got the attention of the room, probably more than Kevin Warsh, possible. Wow. Because he's built the connections of all the other governors.
Yeah.
And if Powell's arguing against the idea of cutting interest rates when it comes to the June meeting when Warsh takes over, that's where you could see a dissent for the first time, I think, since Volcker. You have to go back to Volcker for when you last had the Federal Reserve chair have a dissent go against them. Now, if Powell bows out, that means that's another seat that Trump can nominate somebody for. And then and if Lisa Cook's Supreme Court hearing doesn't go her way, then we're talking about a board that's highly governed by Trump appointees. And then things could get more interesting.
Jordan Rochester, thank you so much. Greatly appreciated this morning with Mizuho. Fascinating. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Daniel Ives with us is Wedbush, of course, coming off the glory of a Barron's cover. Were you surprised by the Barron's article? Like they had like a flow chart of all your business interests. Are you on speaking terms with Wedbush compliance?
Of course. Look, I mean, it's one look, I understand the nature of when you expand opportunities outside just traditional analysts. It's something where you're breaking new ground, right? But it's something like if I chew gum, Wedbush knows. And the reality is that I get the criticism, but look, it's something for 25 years being bullish on tech, being bullish on the AI revolution, it's led to obviously other opportunities, but it's something where, I get the criticism.
I want to go back to first principles here. There's a couple courses we took on network effect, on Metcalfe's law, on Ethernet study here, and the answers that devolved into spectacular profits for a very few. Michael Mauboussin just being iconic on this early work as well. It's still in play, right? When I look at Google's profit machine, it's about Metcalfe's law. They're playing a different rule book, and we don't understand it.
Exactly. I mean, and that's what, to further your point, if you look at the cloud growth, 48%, you look at Capex now, that's basically, going to be, really almost doubling. This just shows that these companies, they see the monetization path. It's happening. Now, just investors be like, well, why would you not slow up? Because they have to accelerate because of the arms race that's playing out. So when you look at earnings season the last few weeks, it's further validated that this is not a bubble. This is an AI revolution. The monetization just started. And it's my view, to view it that software, it's essentially what I'll call an Armageddon-like environment for software. And I think this is going to be viewed as, a time where software names have gotten so oversold. I'd have to go back 25 years, maybe 2 or 3 times that I've ever seen a moment like this.
So how do you respond to the concern that some people have that AI poses a fundamental threat to certain aspects of software, specialized software, application software?
Look, I think on the edges down the road, is it a headwind? Yeah. But then on the other hand, for a Salesforce or ServiceNow, for an Adobe, for large work that you could argue that AI is actually a tailwind, but they just haven't seen the monetization yet. Because it's ultimately the use cases are going to be built by software. And Palantir being the first one, you could say Snowflake, Mongo are next in line. And I just think the view that software is done, that you're going to have companies that are going to go away from a Salesforce to a Claude or an Anthropic model is just it's somewhere between ridiculous to fictional or whatever.
Are you seeing the major software companies, let's pick on MSFT, are they having conversations in Redmond to say we're down 26%? Do we take debt to buy back shares and other creative? I mean, do they want to be opportunistic given this AI frenzy?
Well, look, I think this is going to create a massive M&A cycle in software. Because to Tom's point, if you look at the cash flow, both on the PE side as well as on the strategic, and you look now where these software companies trade, if you think about maintenance ARR, you basically would have to assume that numbers come down 25% the next 3 years, not to buy the sector.
Dan Ives with us, folks, worldwide. We're thrilled to have him on. Robert Schiffman with us later, the best in conversation on technology. Okay, you know where I am on Tesla. You and I sit up in the food court over cheese. I have Cheez-Its. Ives has something granola.
And you had a bullish scarf you were wearing too.
Okay, but but the bottom line, Dan Ives, is they're going to take Tesla, taking out 2 vehicles, something new is going to happen. They're going to run it into xAI, whatever the hell that is, and they're going to fund it through Starlink. Are things in space going to make this accounting work?
Well, it's my view that Tesla and SpaceX eventually merge. Like
okay.
So this is X and xAI, SpaceX.
Is there going to be a legitimate red herring? Is there going to be a legitimate process, or is it just Musk blather?
No, I think it's a legitimate process. I think this is all step by step in terms of what's going to happen. I think the reality is, okay, like, well, why would Musk do this? Because essentially, when you look at xAI, that's so much of the AI technology now that's within SpaceX. SpaceX basically being the vehicle that obviously gets you to space. It's Musk's view where he's basically creating his own ecosystem. You talk about circular financing and everything else. He's internally building this. What I would argue is probably going to be the biggest AI company in the world.
Is this whole new thing, this SpaceX/xAI, is that going to go public this year?
Well, yeah, I mean, I think it's one, like, that would make a ton of sense for SpaceX to go public. Then you think about xAI being a key component to that. I think then the thing for investors is trying to figure out, how does this affect Tesla, and when does that cross-pollination start?
Okay, Bitcoin is 69,000. We haven't broken down below, but everybody's paying attention. 69,500. The fancy people at crypto say, where's the underlying? Where's the underlying on the combination of SpaceX, xAI, and Tesla? What's the underlying free cash flow generation?
I mean, look, it's my view, autonomous and robotics alone for Tesla. Numbers today, if you think about free cash flow will be up 5-6x the next 4 or 5 years, just based on that. Then when you actually look, if you actually combine it all, you're essentially looking at something where they could, when you think about the longer term model, they would generate free cash flow potentially on par with any of these big
So you're saying,
players.
Paul's got 8 questions. This is my last one, call. Alexis, get out the surveillance cork and put it in my mouth when I'm done with this question. You got a red herring out right now. Basically, there's no profit model, and it's an innovation hope 5 years out. Is that the basic structure of the deal?
xAI, let's say $1 billion a month, whatever that they're burning. So but Tom, my view is, like, it's no different than the $185 billion that Google's going to spend in Capex, or Microsoft's doing Capex. Right now, you are betting on the next 2, 3, 4, 5 years. Now, do you have to be a believer, and does that impact the near term in terms of these names? Of course. But the view from an investor perspective, and it's my view, is that we're in the 4th industrial revolution. We're in year 3 of a 10-year build out.
We've had some great reporting from Bloomberg News on Elon Musk and SpaceX and xAI and this merger here. And I think 2 themes out there. The bulls are saying, hey, you're putting together the great SpaceX with arguably the leading AI company. Put those 2 together. What a great story. Others might say, boy, it kind of feels like SpaceX is bailing out xAI or vice versa. But we don't know, because we don't know any numbers there, do we?
No, we don't. I mean, obviously the burn, which we know is probably about $1 billion a month. But for SpaceX, they're getting the AI technology from xAI, so that they ultimately need. If you think about this being what I'll call an AI play, it was the first step. But they eventually go down the aisle with Tesla.
Okay, I just published moments ago. We do this in real time, folks. We make it up as we go. Dan Ives with us with Wedbush. Robert Schiffman, who will be with us in the next hour, published this moments ago. This is on the credit, on the build out of Google on AI. Alphabet now, AI Capex poster child, but risk is low. He looks at 127 billion cash balance. And again, Dan Ives, I go back to these things are profit machines. Like, do you say the Capex is almost a rounding error spread out over 2, 3, 5 years.
For every dollar you're spending in CapEx, you're basically going to generate 40-50% free cash flow on every dollar that you're investing in CapEx. I mean, if you go through the numbers, and that's why it's my view, you're going to continue to put as much into this, given the cash flow machine that you've seen Alphabet produce, what I believe Microsoft's going to produce, and I think so many other tech companies that are going down this path. And they have no choice but to go down the path, despite maybe like stocks this week or whatever over the last few weeks.
Okay, but this paragraph below is Oracle. Do you envision the Ellisons have got to, at some point, jettison Oracle because they don't have the EBITDA to fund all those hopes and dreams?
But I think that's why they did the 45 to 50 billion. They laid it out in terms of the transparency, how they're going to raise the capital. And I just continue to say investors, okay, let's say Oracle never touched OpenAI, the 300 billion. They didn't touch any of these deals. Okay. So you're saying, would you spend 30 billion, 40 billion in the hopes that you could get 500-600 billion over the next 4 or 5 years? Any company in the world is going to take that. Now, that's why like Oracle's stock being such an overhang on this, the math of it is this is essentially giving them the opportunity to change the trajectory of their company, become a huge player when it comes to, the 4 to 5 trillion that's going to be spent. That's why they're doing it.
Given some of the sell-off here in software stocks, what are your top picks here on the weakness?
Look, I think the one that is the most oversold relative to the install base, free cash flow, and where they sit is Salesforce.
Okay.
No, am I saying like, has Bloom come off the rose and Benioff and Salesforce? Is this disruptive to the business model? Yes. But to say that the stock right now is basically trading in almost, you have to assume that this is a structurally broken company, which it's not.
Yep.
And then I'd say cybersecurity, look at a name like CrowdStrike. And then on the hyperscale, look, if you look at the sell-off on Microsoft here, I think it's one of the most head-scratching sell-offs that I've seen in my 25 years.
So how do they respond to that? That's what I want to know.
And they're going to have...
Their CFO's got to be. Who's their CFO? I don't even know. Are you their CFO?
No.
Again, it's one where, to me, they're going to have to do something significant here to make a statement to the market about their stock and about their confidence. And I think, it's ultimately
Amy Hood. What does Amy Hood say to Nadella? Are you kidding me?
But Amy Hood, in my opinion, not just in tech, but across, I think just across any major public company, is probably top 5 CFO out there.
Yeah.
So Amy Hood's not someone that's just going to sit here and watch this and do nothing.
Wait a minute. She went to Duke.
Sure she
Problem
did.
solved.
Exactly.
Problem
Exactly.
solved.
So what is the conversation you're having with clients? Is it panic? Is it I'm selling now and I'll think about it later?
I'm hearing from clients I haven't heard from in a decade. 7 years,
Okay.
10 years. Because bottom line is like they're that panicked or nervous not to explain some of these sell-offs, trying to say it's something that they're missing. And my whole point is like, look, in covering this going back to late 90s, like we've been through times where like whether it's bubble, burst, financial crisis, this is one, it is it's a structural sell-off on software that's unlike anything in terms of just core structural that I've ever seen in my career.
Okay, in 90 days, when Microsoft does Q2, so like, ending March 30 and you wait 30 days or 40 days, they're going to come out with a report. It's the same old cash generation, right?
And I'd say accelerated relative to what they got. I think the only reason the stock sold off so dramatically, it's because not all the CapEx is being allocated to Azure, which that's what investors want to see. And then it was kind of split in hairs, Azure not having a 4 in front of it. And from a growth perspective, it's at 38, 39%. But I think that is like missing the overall point. The enterprise AI revolution goes through Redmond. That's in their core backyard.
So what's the message you have today, which is, hey, ride this out or try to pick winners and losers? What's the message?
The message is the winners, you buy them table pounder levels, because it's my view, just like last year we had DeepSeek and Liberation Day and maybe some other sort of, geopolitical, you'll have these moments 4 or 5 times in a year. This is not the end of the AI trade.
Right.
This is not a bubble that's bursting. You remember the bears will come out and the usual. To me, it's like, look at earnings season, look at structure, look at monetization, and look, and that's the reality. But look, like when I'm in a restaurant last night and the chef comes out and asks about if he should be buying tech, which actually happened. Yeah. It's definitely.
This happened at Chipotle?
No, it happened. It happened at an awesome Italian restaurant that would actually be very Keene style, Sweeney style. Yep. But look, when that happens, it shows.
I got 57 seconds because Michael Barr needs his timer. He's going to have a tantrum. I'm looking at Apple. Just for you, I did a log chart of Apple Computer. And the bottom line, folks, is in April of this year, the world said, shut up. It's going to die. It's going to be terrible. And Dan Ives said, 180 out to 280 as well. On a long-term trend, it's trading just below trend line. I mean, there's room to move to the upside. What will be that catalyst?
Look at the stock movement the last 2-3 weeks, right, against the broader, tech sell-off. To me, it's just look what Google said yesterday. AI is now coming to Cupertino. That's going to be huge. And I think investors are underestimating what that is going to mean about monetization for Apple. And I think that is ultimately what it comes down to. You are not factoring in any premium to AI that goes through Cupertino and what ultimately is the 2.5 billion iOS device.
It's like clockwork. Saturday, I have to go to the Apple store because one of the cherubs, OMG, my phone is dead. That's the reality, Paul.
Yep.
I mean, it's just, it's endless like rebuy toys. Dan Ives, go away. Thank you so much.
You.
With Wedbush, congratulations on your cover of Barron's.
Thank you. I appreciate it.
Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Wendy Schiller with us with Brown University, and of course her book on civics, absolutely definitive across the education of America. Professor Schiller, I want to look at ICE. So we had a small matter on September 11th of 2001. We had legislation a bit of a month later, 2002. And in 2003, we merged Customs and some Justice Department INS thing together, and I guess we named it ICE. When did ICE morph from those two original institutions, I should say? When did it morph into what we observe today?
Well, I mean, Tom, you're right to sort of point out things also like the Coast Guard. Basically, the whole idea is sort of internal security against external forces. That's really what ICE was, not ICE, sorry, see, even I'm doing it, what Homeland Security was supposed to do. And the justification for Homeland Security was communication, that there were people who thought that the 2001 tragedy was a failure of communication across independent agencies that didn't talk to each other. And so if you are in the same cabinet department led by a single secretary, you're going to talk to each other and you're going to be better coordinated, and that would make the country safer. That was the rationale. And so this is what it was always supposed to be, internal security, but against external forces. So the question is, do you think people who've been living here for 10 years or 15 years are the external enemy? And that's what the Trump administration is arguing.
My oldest cash flow. I'm in Shanghai having a beverage of my choice at the Peace Hotel with cash flow. And Wendy, he's explaining to me the police state of China, like the 3 or 4 levels of police officers on the streets of Shanghai or wherever. Have we become China with our domestic enforcement?
I don't think across the country we've become China, but I think if you're living in cities where you used to walk down the street and there were police officers that you knew your local town or your local county, and maybe a statey, as we call them in Rhode Island, on the highway, you accepted that. That's part of what you expected. You don't expect masked people with, machine guns on the street that can stop you and ask you who you are. And I think that is what has really rattled the American voter, the independents, some Republicans in polling, and all Democrats thinking, I don't want to live in a country where this is possible. Certainly, the United States government has had surveillance powers over the last 20 years that are extraordinary. Ben Franklin would be absolutely appalled at the extent to which this government can survey any citizen for any reason. But to stop physically people, drag them out of cars, ask for identification, that is not the the kind of country America wants to live in. 63% of America says we don't want this. And so this is an interesting thing going into the midterms, Tom. In 2018, it was about Trump the person. Trump, we don't like Trump, we like Trump, but this is different. This election is about policy. This election about how the policy of the Trump administration are affecting your daily life and your sense of security. And I think that's really where the sort of presence of ICE and the way they look with the masks and sort of all the videos we've seen, this is scary. It's scary to people. But we're not yet China.
Wendy,
or Russia, for that matter.
What is the political, pushback that the administration is getting now as it relates to Homeland Security? We've seen President Trump ordered a partial pullback in Minneapolis. How are they viewing it these days in D.C.?
Well, I think you can see from some of the comments that the president's made, and we'll hear more from the president in that interview. It's already been leaked, but before the Super Bowl, a traditional presidential interview. But what we're seeing is, I think, a difficulty in the White House, right? Are you going to be Stephen Miller and Steve Bannon, or are you going to be Tom Homan? Like, who are you going to be, and what are your policies now, Mr. President? And he has really, sort of swung to the right. And I think now he recognizes that this policy could cost him not just the House, but the Senate as well. And he doesn't want to be president with a completely Democratic Congress. And that's the argument, I think, the more moderate voices in the White House are saying to him, we can do this. We don't have to do it this way.
Okay, so Wendy Schiller, political advisor, inside baseball. Wendy Schiller, you're on the team trying to get Susan Collins reelected in Maine. What is your advice to Senator Collins?
Well, Senator Collins has made an argument, I think, to the president. I wasn't on the phone call, but I think this is the argument. I'm the chair of the Appropriations Committee. I can help you hold the Republican Senate. And if you don't get your ICE folks out of Maine, I'm going to lose this election. And if I lose this election, you can lose Ohio. You can lose North Carolina. I don't know. Texas is always a pipe dream for the Democrats as far as I'm concerned, but now they're making noises. So she's basically saying, Mr. President, I'm not just another senator running in Maine. I'm the linchpin to your keeping the Republican Senate. And I think that's what she has been saying to the White House. And she probably has to come out stronger against ICE, but getting them out of Maine is a pretty strong first step for her.
In reopening the government, the mini shutdown, did the Democrats get what they wanted as it relates to Homeland Security and ICE agents?
Well, they didn't get what they wanted necessarily to sort of, now Kristi Noem says they'll wear body cameras. But the idea of sort of the warrants and stopping people, I think that's still pretty murky. And we still got people in detention centers, and they're planning to build another detention center, for example, in New Hampshire. And the governor didn't even know about it, the Republican governor in New Hampshire. So I think they still haven't decided. And that means the Democrats still have some fodder. But I tell you what they did get. They got all the funding for research, for science and health restored and increased. And they took away some of, the ability of the Trump administration to cut that funding. That's a very big win for a lot of Democrats running in the House who want to say that they've helped their local communities.
Wendy, just one final thing here. You mentioned 63% are against ICE or whatever the coloring is. That, I believe, tells me that 30% plus of Americans are really, really happy with ICE in these communities. What is the president's relationship right now with traditional diehard law and order? I sound like Nixon. What is the relationship now of the president to law and order America?
Tom, I think the president has 34% of this country. Period. They have been loyal since he first ran in 2016. They stayed loyal in 2020, and they came back and stayed loyal in 2024. He's got 34%. It's not enough to win. Obviously, he can't run for president, but it's not enough for the Republicans to keep the House and the Senate. 34% is just not going to win you the day. So, he may have these folks, but, you can't win the elections with them. So that's the problem. He expanded his coalition, and now that coalition has contracted significantly. And that is really a challenge for the GOP heading into the midterm. So this is where he is. And I would also say, law and order in your community, no robberies, assaults, murders, rapes, all the horrible things we think about, is different, I think, for Americans than grabbing people off the street and deporting them. I think there are different kinds of law and order, and I think that's where you're getting some of the differentiation within the Republican Party.
Wendy Schiller Brown, hugely valuable. Thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
With our newspapers, Alexis Christoforous.
All right, I'm going to start with a Super Bowl story. We've been doing that. That's sort of been the theme for our listeners this week, right? We at least pull one Super Bowl story for newspapers. And this one's from the New York Post. You knew it was going to happen sometime. We have our first AI-related ad on the Super Bowl this year. It's Anthropic. So it's going to take a jab at its rival OpenAI in its first ever Super Bowl ad. It's blasting the company for introducing advertising to its ChatGPT chatbot. It's something that Anthropic has promised to never do with its chatbot called Claude. Remember when Netflix said no ads ever?
Yep.
Yeah, that went out the window, just saying. So they're going to spend big time. 30-second ad on this year's Super Bowl. We've talked about it, more than $8 million. And you know what that turns out to per second? $265,000 per second. I did the math.
Oh, look at you.
I can do that. So, so among other ads that we're going to be, lots of celebrities in the Super Bowl ads this year, you're going to see some AI ads as well.
Okay.
All right.
Very
In
cool.
the Washington Post today, they're telling us what we've been getting wrong when it comes to exercise. And I think if you're like me, you're going to like this story.
Why are you looking at me like this? Yes, you don't look at Polly.
It turns out taking the stairs can really do your body a world of good. So when given the choice between the escalator, like we have the almost circular escalator here, right? One of the only in the world. Or the stairs. Take the stairs, because the World Health Organization now is no longer specifying a minimum duration of moderate or vigorous aerobic activity. Studies are showing even tiny regular bursts of efforts, we're talking as short as 30 seconds, can capture much of the health benefits of the gym.
Where's 10,000 steps now?
Are we still doing that?
Are we? Yeah, on your Apple Watch. Are you still doing that?
I still try to do that.
I mean, look, something's better than nothing.
I'm not in this weather. I mean, that almost froze to death a couple days ago.
Still
Walking to Penn
people
Station.
running. I don't know.
Yep.
But wait, I like this one just to give people out there like myself some hope. Climbing 2 to 3 flights of stairs just a few times a day lowers the risk of dying by 40%.
Wow.
Do you need more incentive to get your butt up the stairs?
Where did they come up with these statistics?
Exactly.
Having a bag of Cheez-Its a day, how much does that lower?
Well, maybe if you eat the Cheez-Its while you're walking up the stairs.
There you go. That's
I don't know.
what it would be.
All right, and then this one, this is a fun one. So it's from the Hollywood Reporter about a Christie's auction next month with some iconic memorabilia. So this collection belonged to the late Indianapolis Colts owner, Jim Irsay. Oh. And here are just a few of the items. Sylvester Stallone's handwritten script notebook from Rocky.
That's pretty cool.
The volleyball that kept Tom Hanks company in the film Castaway. Do you remember it? Wilson, very good. And Ringo Starr's drumhead from the Beatles' debut on the Ed Sullivan Show. And I have a quick story here. I interviewed Ringo years ago when I was at CBS when he was touring with his all-star band. Yep. And we referred to the Beatles as his, quote, other band. So I thought that was kind of cute. By the way, Ringo is still touring. He's got like 12 tour dates this year. It's crazy. So look, I know you're going to want to start bidding on this, guys. It's going to start opening the online bids March 3rd. They're expecting to make over $40 million from this collection. It's also free. If you're in the city, it's free to the public. You can go look at the display at Christie's. I'm going to make some time to do that.
Okay, very cool.
Okay. Thank you so much, Alexis Christoforous, of the newspapers.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.